What does Bitcoin's inability to stay above $70,000 signify? Is it a warning sign for US stock indexes, which continue to hit all-time highs despite the Fed's intention to keep rates on hold? Or is it a typical consolidation, beneficial for the quick recovery of the upward trend? History shows that after all previous halvings, Pythagoras bunched new highs, but the path was bumpy. This time, the new peak was formed earlier than the halving. What's wrong with the cryptocurrency market? It's hard to expect patterns from an asset disconnected from the real economy. Bitcoin rose because everyone believed it would rise. As soon as something went wrong and the cryptocurrency began to consolidate, the ETF market faced capital outflows. As a result, total assets under management in specialized exchange traded funds fell from more than $100 billion to $94 billion in a week. Things aren't any better with venture capital funding for cryptocurrency startups. According to Defilima, the total since 2014 is around $101 billion. The Block Research estimates $95 billion since 2014. However, the peak was in 2020, one coinciding with a record high in fintech financing. Clearly, Bitcoin is still viewed as a risky asset, but the sharp decline in its correlation with US stock indexes is thought-provoking. The SEP 500 has risen 15 since the beginning of the year, setting more than 36 record peaks thanks to hopes for improved corporate profits amid a still strong U.S. economy. Dottress bulls cannot boast such a trump card. The main reasons for the rise in cryptocurrency were capital inflow into ETFs, the halving, and hopes for a dovish monetary policy from the Fed. These reasons led to expectations that the U.S. dollar would weaken. It didn't. Despite a cooling U.S. economy and slowing inflation, the Fed is in no hurry to cut rates. For the SEP 500, with its potential for improved corporate profits, it's enough to know that the central bank will eventually cut rates. For Bitcoin, this is insufficient. As a result, a new correlation between cryptocurrency and the U.S. dollar is emerging. Bloomberg's used index has strengthened for 5 consecutive weeks, reaching its highest level since November. It's no surprise that Bottrist is under pressure. Moreover, the token's decline risks accelerating if the U.S. stock market bubble bursts, or if the SEP 500 at least undergoes a correction. Technically, on the daily Bottrist chart, the splash and shelf pattern was played out. Shorts formed from $66,000 should be held as long as Bitcoin trades below $69,000. In this case, the fake-out, throwback model will be activated, and it will be time to consider buying.